All right. What's up, guys? So came to my attention that you guys are having some trouble kind of finding where to look for catalysts. And so I thought it might be helpful to kind of make this video to just go over, generally kind of my approach to thinking about ways in which we find catalysts. Obviously, we've gone over, the revenue, margin, market share, different types of catalysts, but maybe kind of going more over like how to actually look for them might be helpful. So that's why I want to create this video for you guys to look through. So generally speaking, there's two approaches to what you guys are doing. There's a top-down approach and the bottom-up approach. I think I guess starting with the top-down approach, you guys are all assigned sectors to look into. So let's just say economics, right? That includes financial services, transportation, real estates. Within these three sectors, I think it's very helpful to think about the thematic trends that companies could be adapting to in each. So let's just take financial services, for example. You could be looking at like the relative like underregulation of private markets and maybe like how the relationships with some of these mega funds and like insurers have allowed them to really grow their private credit businesses because insurance companies essentially have a lot of capital to allocate, and so they're putting them into private credit funds because banks right now aren't able to make as many loans, which means they're not able to securitize them as much, whatever the case may be. But that'd be a trend that's happening in the financial services industry. And you look at which companies kind of have outsized exposure to that trend. And so I think the top-down approach kind of emphasizes taking a look at, just industry trends and extrapolating, which companies or kind of just finding which companies have exposure to that. So like, who has deeper ties with larger insurers, for example, or like who has a first mover advantage in the reinsurance space. That might be an example for the financial service industry. Now, for somebody looking into TMT, like obviously AI is a big trend. And so you kind of have to think about, what's priced in and what's not priced in. And that kind of gets into the next part where like, if you identify these trends, a lot of companies are obviously going to be heavily associated with these trends. And so that might be reflected in the stock price, whether it's up or down. It's your job as an analyst to find companies that, either are mispriced. So like, yeah, maybe the company's up about 20% due to maybe a tech company's up about 20% year to date, and a lot of that's driven by AI, but they actually have outsized exposure to AI because their software allows them to do this, and this. And so realistically, it should be trading more like 40% up year to date. I think kind of looking at like relative outperformance is like a good way of framing that too. So like seeing which companies are, underperforming the peer group when it should be performing in line with the peer group, or even better, performing in line with the peer group when it should be outperforming the peer group. But I think a catalyst can be something as simple as that, where it's underperformance that should be inline performance or inline performance that should be outperformance. I think that's like the top-down way of kind of thinking about it. And you're looking at just like general mispricings in the marketplace where you'll be able to find through companies' exposure to trends whether their stock price actually reflects that. And then there's the other kind of aspect of top-down analysis, which I think kind of includes looking at the second order effects. And that really depends on your ability to sort of think abstractly. I think we talked about a meeting recently where Jefferies had put out a bullish note on United Airlines for their ability to get their fuel expense down when if the average weight per person is brought down 10 pounds by these GLP-1 drugs. Now, that's probably not something that most people on Wall Street were thinking about with this kind of, recent trend with the GLP-1 drugs. And that's kind of, more of a second, third order effect that obviously those analysts kind of put together. And it's a lot longer term, but the point being, you kind of have to think outside the box a little bit and really think abstractly about these things. I think that's where you'd be able to find top-down catalysts too, because you're really looking at just broad market trends and figuring out how they're going to apply to industries. So I think that's kind of, the general sort of idea there. And I can kind of hash out that example too. You might be thinking why that lower fuel expense, why isn't that going to affect most airlines? That's a broad industry catalyst. And it's not going to disproportionately affect United Airlines. Well, maybe they have the longest routes out of any domestic carrier or, the most international outbound flights per day, which they do. And so it would disproportionately affect them. And so as a result of that, fuel expense is a greater percentage of their total expenses. And so you kind of have to do your own digging to gather some of this stuff as well. But I think that should kind of all come with the industry context that you've gathered when you've decided to pitch an airline in the first place. You know the industry pretty well. And In terms of where to find these things, so like I think reading sell side reports is a great way to see kind of what the market cares about, because these sell side reports, these analysts, they really only publish on what investors want to hear. And so forming an opinion on the consensus, like 3 to 4 topics that most sell side analysts seem to be writing about, that will also help you come up with a good catalyst if you find that your opinion on it is mispriced from what the market currently thinks. And so in order to find those reports, we've obviously talked about Mergent, FactSet, Bloomberg. You guys have a lot of resources at your disposal, and obviously reach out, if you're having trouble using some of those. And then the other option at your disposal is bottom-up analysis. And so this is where you're looking closely at the major competitors in the industry, analyzing their financial statements, and really looking at where revenue might be able to continue growing at an accelerated pace. And also if that revenue is going to flow through to the bottom line at a higher rate than other existing revenue streams. In other words, are the growing revenue segments of a company also higher margin? That could also be a margin catalyst. And will the company achieve margin accretion as they continue to scale? Try to think of an example of this. So think about Apple's services segment. You guys all know Apple is a company. Their services segment is kind of like your Apple TV, Apple Music, other things that they're attaching to, other software that they're attaching to the products that they're selling. And as they continue to scale the shows, the content that they're offering on these platforms, the costs are going to slowly come down over time, while the subscription revenues is essentially staying the same. They're going to achieve some sort of economies of scale with that. And so I think, that I imagine that's probably very priced into the stock, because Apple is the most covered company and the biggest company in the market. But I think that's the kind of thing you can take from a bottom up perspective, is seeing where revenue is growing, seeing, if there's continued potential growth there. And maybe on the margin side of it, like, are they able to kind of get higher flow through? And when I say flow through, I mean the ability of revenue to kind of go to the bottom line. And so it's more about looking at these types of things from a revenue perspective. And obviously the one way you can kind of standardize for size across the industry too is just kind of making everything a ratio or a multiple, because that'll tell you, how things are valued or what their like return on assets, inventory turnover, all those things are all standardized metrics that tells you how efficient a company is allocating its capital, or what the market thinks of this company if it is undervalued. And so I think using ratios and multiples is a good way to kind of do bottom up analysis as well when you're looking across the broad spectrum of the industry. I think bottom up generally takes a little bit longer to master. It's something I'm definitely still learning how to do, because it's a lot more work. Especially for you guys, it's going to be very hard to get the full context of an industry and the companies within it in the span of 2 to 3 weeks. But, I would encourage you to try, obviously, if time permits, because I do think that bottom-up analysis is generally the, more reliable and, better method. I think top-down obviously helps when you're talking to people that, don't know as much about your industry. But if you guys are, like if this is like a job, for example, and like obviously you guys want to be simulating that when you're doing these pitches, you really have to know everything you're talking about, and that kind of comes better with bottom up analysis. So I'll leave it there. Those are kind of, I've outlined some resources for you guys to use, where to find them with like the sell side analysts reports, and kind of just seeing what people actually care about reading. I'll leave it there. Yeah. And I think definitely reach out to me. You guys all have my email with questions on any of this stuff. Obviously, this is not something that, takes a week or 2 weeks to learn. This is kind of something that, I'm still in the process of learning how to do. I'm hoping to try and explain it to you guys in the best way possible. But anything I can help you guys out with, feel free to reach out. So yeah, and obviously financial publications, always your best friend as well. You're only gonna be able to identify those market trends in top down if you're following the markets day to day. And so I think reading every day will also help you out with that. But yeah, with that, I'll leave it there. As always, feel free to reach out with any questions. And yeah, hope this is helpful. Thanks, guys.